as the days go by. We can see here, go ahead and just accelerate through March. You can see as the slide starts to come in, breaking through, these are multi-year supports here, as the market starts breaking through volume just absolutely through the roof until finally today, yesterday the market had a huge down day, and then today gapping down to $4.81 as basically the firm has got to cease operations or get bought out. So I went through the sequence on a monthly basis. If we would step through this on a daily basis, I think it would just take far too much time. So let's check this out on a weekly basis. And we can see a very similar pattern. If you remember from the monthly, we had an area of, remember in early 2006, we had this expanding triangle pattern. Here's the breakout. We'll have to zoom in a little bit since volume increased so much on a daily basis. And if we look here on a daily basis, we've got, let's see, roughly speaking, 10 million shares is the average. Okay, so we go from an average of 10 million. Where in early 2007, once Bear Stearns started announcing his hedge funds were having problems, the hedge funds are melting down, look at this, double and triple the moving average in volume. So let's just follow this through. You can see as the market starts to come down with this extra detail, we really have an idea of the overall fight that's going on here. Let's go ahead and put the pointer back on. You can see here the volume really comes in on this down day here, again indicating the possibility of a reversal. But the key here is look at how fast volume dries up and drops off oops, let me get red on there. There we go. How fast volume dries up on the market pushing up. Okay, you see on a daily basis, especially coming into here, into resistance, look at this, volume is way below the moving average. Now let's push over here as we start coming into, hello, drum roll. There we go. As we start coming into this support area again, now let's take a look at this. We've got, double top here. If we draw the line straight across, you can see the market entering into the support area. The key is going to be what happens with volume. If volume is high on the down bars, that's not a good sign. If volume is low on the up bars, that's not a good sign either. We can see as we cross, volume is just staying low in general with respect to the average. You can see here, there's the break. This is the true death knell, if you will, where you start to see the market do this. It's breaking through the support area on a daily basis. Volume is just absolutely going through the roof. We're getting up this line. Actually, I changed to 2 times the moving average, so we're up near twice the moving average on the first day. Once the market breaks through, well over twice. Then by the time we break through on a daily basis, we're actually up around 4 times the average volume. You can see the market tests again here as it broke through. There's the daily test, or the daily little dipper. The market comes up, pops up. Look at this huge drop on the up bar. Okay, let's look at that. You've got 9 million shares down from 33 million the day before. The next day, pushing up again, 18 million. Then another down day, 24 million. Okay, then we have the drastic slide off. Again, volume coming in, big volume coming in. In this case, about 10 times the average volume. Now, again, we've got to say, okay, alert. We just need to watch what's going on. If the market is bearish, what's it going to do? It's going to push down, come up into our resistance area for the retest. This is the way the monthly played out. If you remember, we had the monthly on there showing the retest. Look at this. The market is closing up on the highs